Risk management is probably the number one thing I wish I knew about at the start of my trading journey. It's the number one reason why I think people begin to lose accounts, blow accounts at the start of their journey. And if you guys have already seen the video, I'll put it up on the top right about how the start of my journey was. And I pretty much was up and down. It was such a roller coaster because I didn't know proper risk management. I didn't know what it was or how to actually utilize it. Risk management is something that's going to be able to differentiate traders to gamblers, right? Apart from your strategy, what's within your strategy, what's within your trading plan is your risk plan, your risk management. And later on in this video, we're going to jump on the charts and I'm going to show you some tools on how to actually execute and use proper risk management and use that effectively. But let's go through the theory stuff. And I just wanted to share my risk strategy, which is basically I only risk 1% per trade. So what that means, if I'm risking 1% of my account balance per trade, is that I would have to lose 100 times in order to completely blow my account. A common question that I always get is, what lot size do I use? And that basically indicates to me that that person has no risk management. Because the thing with lot size is it's going to depend on your account balance, the pair, and your stop loss. Those three things change, but your risk management should never change. So you can either risk 1%, 2%, 3%, maybe 5%, whatever your strategy may be, or your risk appetite. That's up to you. But that should always be fixed. That should never ever change. So yeah, your account balance is going to change depending, you could be trading with $500, $10,000, I don't know, $1 million. Of course, your pair's going to change. And then your stop loss will change. You could have a fixed stop loss. I don't know what your strategy may be, but for me, it will change depending. It might be 12 pips, 15 pips, 8 pips, etc., etc. But what will never ever change is your risk management. And that is so important. So hopefully you guys will stop asking me, what lot size I use for like euro dollar, or what's the best, lot size to use for gold. Because again, that's the wrong question. The question should be, how much do you risk per trade? And then the rest is going to be up to you and your strategy. Now, I wanted to also stress the importance of why you should always keep it, that set number. If you commit to 1%, don't start changing 2%, 3% because you feel like it, or because you feel like this trade's going to be a winner. You want to double your percentages by risking 2% instead of 1%. If you're going to commit to 1%, then commit to 1%. If you're going to commit to 3%, commit to 3%. Because what's going to happen, and this is something that I personally haven't experienced, but I've heard stories of it, is that you're risking 1% and then you're playing with the numbers. You start risking 3% because you feel like this trade's going to be a winner, and then you suddenly lose that 3%. So then you go back to risking 1%, and then that trade banked, I don't know, let's say it banked 5%, and you're like, oh, I could have made 10% if I just, risk 2%. Like, you start playing with the numbers, and that's how you start getting emotional. And that's not a trait of a consistently profitable trader who's confident in their trading and in their plan. If they're completely going back and forth, and then they start getting, pissed off if they could have, would have, should have made X amount of percentage because they could have risked more. You got to stick to one risk. But again, that was the biggest mistake that I made in the start of my journey, was not understanding risk. So please, if you are new to the Forex market, so please look into risk management, make a decision on the risk you want to use. And then I'm going to go into the apps later on to show you exactly what lot size you can use with the pair account balance and the stop loss you'll be using in pips. So let's have a look at, probabilities in terms of, 10 trades and you're risking 1%. Let's say 8 of those trades lose. So you're down 8%. But then let's say 2 of those trades banks you 4%. So net profit, you're at break even. Let's say you start messing with the numbers and you just start to, pick and choose depending on the pair or the kind of setup, then that's gonna mess things up. You won't be down 8%, you could be down 15%, 20%, and that's really gonna fuck with your emotions. I guess a question that might come up is, do I reset my risk per account balance per day, or is it per trade, or is it per month? Because what I used to do before was I would actually reset it per month because I wasn't taking as many trades. But as I've been evolving in my strategy, I now actually reset sort of the lot size or the quantity size per trade, like per end of the trade. So let's say I am at 100,000 and then I lose 1%, so I'm at 99k. Then I would, for the next trade, I would put my account balance as 99k, 99,000. Let's say I lose again, and then that'll be 1% of the 99 rather than 1% of the 100,000. So it's sort of compounding. So as you're growing your account, your lot sizes will gradually increase as well. So that's another thing that I just wanted to point out, is that yeah, I recalculate the lot sizes with the same risk per new trade, if that makes sense. So we are just jumping on the charts. This is TradingView. This is the software that I use to analyze trades and to also backtest. Highly recommend it. Link in the description if you're interested. But I just wanted to show you the settings that you can switch up when you are forecasting trades. If we just go down here in the predictions and measurement tools, you'll see long and short positions. And if we just double click it, you can sort of see all of this options available. This is the risk to reward. So let's say you have, I don't know, 500 US dollars, risking 1%. Let's just bring this back. Let's just say we were taking a long and we're targeting highs up here, for example. So you'll notice that your risk to reward decreases as your stop increases, and your risk to reward increases as your stop decreases. And that is exactly the same if you had, I don't know, 500,000 US dollars, the same risk to reward. You'll see your quantity size here as well, but I can show you a much clearer way to also look into it, because I don't like to use it off of TradingView. I like to use Myfxbook or an app called Stinu. So definitely go into TradingView and, you know, change your account balance, what your risk is. And obviously if you're doubling your risk, you see your quantity size pretty much doubles as well. Your risk to reward, you just have to, again, manually double that. Now, if you literally just type in Myfxbook position size calculator, you can come up to this page, and you can also input your own details here. So for example, 100,000, risking 1%, let's say 20 pips stop loss for euro dollar. You'll see that we're gonna use five lots. And if you lose, you'll basically lose $1,000, which is 1%. But if we were to do 25 pips, you'll see that the lot size changes, but you still risk the same amount. This goes to show that your lot size will always change as you change your stop loss, assuming that you have a fixed risk. Now, again, this also changes with pair. So with a $100,000 account risking 1% with a 25 pip stop loss, it's 4 lots with euro dollar, but let's try euro yen. It's 4.17 lots. And this just goes to show how you cannot be asking what is the best lot size to use. It really does depend on your account size, your risk, stop loss, and the pair. If we look into, you know, a CAD pair, like let's say Aussie CAD, again, it'll change. This is why it's so important to calculate it, to understand risk management, because this is going to be super important, you know, when you move forward and you elevate in your trading journey. So what is similar to this? If you're on your phone, you can use an app called Stinu. Pretty much the same principles. You know, you can choose your risk, your account balance, your stop loss, and then your currency pair. And they have it on the App Store as well. Again, this is why, there's a reason why they ask you, you know, your account balance, your risk, your stop loss, then your pair. So guys, this is quite a quick one, but hopefully you guys took some value, and it kind of clears things up about risk management, and you were sort of able to see it, how I sort of go about the thought process of plugging in trades, etc, and how I use the risk to reward tool. So if you enjoyed the video, then please give it a thumbs up. If you guys want to watch a video on how I was able to manage FOMO, fear of missing out in the markets while I was trading, then definitely go check it out. Otherwise, I'll see you in the next video. Thank you for watching.